An indictment has been issued against 6 individuals and foreign financial service firm for tax evasion conspiracy. The defendants allegedly used Singapore solution to enable U.S. clients to evade taxes on over $60 million hidden offshore. An indictment was unsealed today in New York, that charges offshore financial service executives and a Swiss financial services company with conspiracy to defraud the IRS by helping 3 large-value U.S. taxpayer clients conceal more than $60 million in income and assets held in undeclared, offshore bank accounts and to evade U.S. income taxes. According to the indictment, from 2009 to 2014, Ivo Beachtiger, Bernhard Lampert, Peter Rug, Roderick Sage, Rolf Schnellman, Daniel Walkley, and Zurich, Switzerland-based Allied Finance Trust AG allegedly defrauded the IRS by concealing income and assets of certain U.S. taxpayer clients with undeclared bank accounts located at Private Bank IHG, a Swiss private bank in Zurich, Switzerland, and elsewhere. In order to assist those clients, the defendants and others allegedly devised and used a scheme called the Singapore Solution to conceal the bank accounts of the U.S.-based clients, their assets, and their income from U.S. authorities. In furtherance of the scheme, the defendants and others allegedly conspired to transfer more than $60 million from undeclared IHG bank accounts of the 3 U.S. clients through a series of nominee bank accounts in Hong Kong and other locations before returning the funds to newly opened accounts at IHG, ostensibly held in the name of a Singapore-based asset manager. The U.S. clients allegedly paid large fees to IHG and others to help them conceal their funds and assets. Prosecuting offshore tax evasion remains one of the tax division's highest priorities, said Acting Deputy Assistant Attorney General Stuart M. Goldberg of the Justice Department's Tax Division. Taxpayers contemplating hiding money abroad, and the foreign bankers, attorneys and finance professionals who design and execute strategies to assist their evasion, should know that the Tax Division and IRS have the investigative resources and expertise to unravel even the most elaborate schemes. As alleged, the individual defendants and the Swiss firm Allied Finance conspired to defraud the IRS by assisting U.S. taxpayers in avoiding their tax obligations, said U.S. Attorney Audrey Strauss for the Southern District of New York. They allegedly did this through an elaborate scheme that involved concealing customer assets at a Swiss private bank through nominee bank accounts in Hong Kong and elsewhere, with funds returning to the private bank in the name of a Singapore firm. One such U.S. customer, Wayne Chin, pleaded guilty to his participation in the so-called Singapore Solution, forfeited more than $2 million to the United States, and awaits sentencing for his admitted crime. If convicted, the defendants face a maximum penalty of 5 years in prison, supervised release and monetary penalties, and the corporate defendant faces monetary penalties. An indictment is merely an allegation and all defendants are presumed innocent until proven guilty beyond a reasonable doubt in a court of law. Also unsealed today was the guilty plea of Wayne Franklin Chin, of Vietnam and San Francisco, California, one of the U.S. taxpayer clients, who participated in the Singapore Solution scheme. According to court documents filed in relation to his guilty plea, from 2001 through 2018, Chin concealed approximately $5 million in undisclosed and untaxed income. During this period, Chin held accounts in nominee names at Private Bank IHG. Beginning in 2010, Chin wired funds from these offshore accounts through nominee accounts in Hong Kong before returning them to newly opened accounts at IHG held in the name of a Singapore-based trust company acting on behalf of 2 foundations created to conceal Chin's ownership of the accounts. Chin subsequently transferred the funds out of Switzerland to undeclared accounts in Singapore. Chin did not file any tax returns or disclose his foreign bank accounts during the years at issue. Chin pleaded guilty to 1 count of tax evasion which carries a maximum penalty of 5 years in prison. Chin also consented to the civil forfeiture of 83% of the funds held in 5 accounts at 2 Singapore banks, which resulted in the successful forfeiture and repatriation to the United States of approximately $2.2 million. The civil forfeiture proceeding is United States of America v. Certain funds on deposit in various accounts, 20 Civ. 3397, LJL. Chin is scheduled to be sentenced on November 19 and faces a maximum penalty of 5 years in prison. He also faces a period of supervised release, restitution and monetary penalties. A federal district court judge will determine any sentence after considering the U.S. sentencing guidelines and other statutory factors. Acting Deputy Assistant Attorney General Stuart M. Goldberg of the Justice Department's Tax Division, U.S. Attorney Audrey Strauss for the Southern District of New York, and Chief James Lee of IRS Criminal Investigation made the announcement. The Department of Justice Office of International Affairs, the Singapore Attorney General's Chambers, and the Commercial Affairs Department of the Singapore Police Force provided significant assistance in this matter. The IRS Criminal Investigation Division is investigating the case. Senior Litigation Counsel Nanette Davis and Trial Attorney Sean Green of the Justice Department's Tax Division and Assistant U.S. Attorney Olga Sferovich of the U.S. Attorney's Office for the Southern District of New York are prosecuting the case.